Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the whole wide world you are tuning in from. Well, as always, I'm excited to welcome you to another promising edition on the Extreme Speed Live. Today is the first edition for this week, and I'm so excited to be with you here this morning. Before we kickstart the session, let's run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi, and I will be very grateful you did, as this will give me a positive feedback that we are all on the same page. Thank you very much, guys, as I look forward to your feedbacks. So let's see what we have here. I think I have a bunch of them right here. I can see Schwabi, I can see Jaguar, I can see Ibrix, then I can see 587888697. I think I'm loving this morning. The energy is spontaneous. Thank you very much, guy. Hello, Carrie. Good morning to you. Glad to have you around. Well, I did have a great weekend right here. In fact, it was a very short one. It was like within a blink of an eye, it's all gone and done. I hope you had a very beautiful one too as well. I see you, Ray ZX4. Good morning to you. Sophia, good morning to you too. All right. I think with this bunch of feedbacks here, it's a good confirmation that we are good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour or so, I will be your host, as I will be taking you on a trading journey where we shall be, as usual, evaluating the financial market from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for this week. And in fact, today is a very this week we embark on what promises to be an important week ahead. This week holds particular significance as we eagerly anticipate the interest rate decisions from major central banks across the globe. Their decisions have the potential to significantly impact the sentiment in the market and, of course, the direction of price action, making it crucial for us to stay informed and prepared. So today's session, we will be discussing how this development may shape our trading strategies and help us navigate the market effectively. So let's get started. I encourage us all to grab your favorite beverages, as you do not want to be missing out on any of the ideas we will be deliberating on today. In fact, I have a bunch of them with simple trading setups to share with you today. And today being the first trading day of the week, this is our first session for the week. It's a great opportunity for you to give me any assets you want us to look at for this week. So if you have any asset, be it cryptocurrency, currency assets, commodities, equity market, what have you, feel free to drop them in the comment section, and I will try to incorporate it into our plans for this week. So once again, you're welcome. And for those of us who are joining us for the first time, who may be wondering at this point that what is all this all about? Well, to simply put, as technical traders, we usually gather here every day, coming together as a community in anticipation of the New York session. And the session officially kickstarts about 10 a.m. UTC, 11 a.m. West African time, and my aim here is to equip us all with the knowledge and skills necessary to make informed trading decisions independently. Trust me, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a beautiful welcome to you and encourage you to actively engage in the comment section. So with that being said, here I can still see one more comment here from Floxy B. Thank you very much, Floxy B. Trust you're doing very well out there. So with that being said, we shall be diving right into the business, and as usual, our daily routine is to check on the economic calendar for fundamental factors that may be influencing the market sentiments today. And by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, of course, most importantly, timing to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. But unfortunately for today, Monday, March 18th, we do not have both high impact or medium tier economic features to look out for. So we will be relying on our technical skills to give us an insight into how to position ourselves for the next move. Then another thing I would like to emphasize here is the fact that during the course of this week, we will be looking forward to a bunch of high impactful events from both the United States and the United Kingdom, which obviously is going to be driving some traction in the market. And the anticipation of this event, most especially the interest rate decisions from both the United States and the United Kingdom, is going to be reflecting on the chart as price action. And it is very possible that we witness an extended sideways trading activity before this event will happen. So we are going to be taking all of this into consideration while we review the current market structure. So with that being said here, let's dive right into the business. And as usual, the first asset we will be taking on this morning is going to be the USOILSPOT. And before I go into the details here, I would like to congratulate every single one of us who was part of this profitable journey last week. As you will remember, we were buying the USOILSPOT right from the beginning of the week as we rode the momentum all the way into the $81 area, maximizing the potential of that move by having multiple buy entries in that regard. So once again, congrats to everyone. And for this week, for the new week, let's see if we can replicate this scenario we had last week, and of course see if the momentum here is going to continue to the upside. And trying to relate the current dynamics in the market with the fundamentals behind the scene, one of the major reasons why we can say the surge is propelled by bullish momentum is the apprehension surrounding supply disruptions amidst escalating geopolitical tensions, notably concerns over possible interruption in supply have intensified following Ukrainian attacks on Russian refineries in the last 1 week. And yesterday we saw a couple of more attacks in that regard. And as at this morning, I was hearing that 12% of Russian refineries have been hit, and this may likely disrupt the supply of oil. And our simple economics tells us that when there is low supply, demand will rise, and the outcome of a rise in demand is high prices, hereby giving the path of least resistance for oil prices to be on the upside. Furthermore, market participants will also be eagerly awaiting interest rate determination from the central banks scheduled for this week, and expectations are high that the Federal Reserve will hold onto its current policy rates at the elevated level. And this, of course, considering the fact that the US oil spot is a US dollar denominated asset, whatever affects the dollar will definitely affect this asset. And with the part of least resistance looking bullish at this point, let's see how we intend to position ourselves for the next move on this asset. So my first point of contact for this week was right on the 4 hours time frame, where I did took into consideration the character of price action in the last 2.5 months or so, I think, since the beginning of this year. And if you look at the structure since the year 2024 began, it is quite obvious that price action has been bullish. Now, connecting the series of higher lows, we have this beautiful ascending trend line, which obviously has been supporting the uptrend move on this asset. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we obviously want to be looking out for patterns and structures that supports the idea of buying. Now, zooming into the current structure, that is looking at what has been going on in this market since the beginning of this month, the month of March that we are in right now, you will see that we've had a barrier for buyers which has been consistent week in, week out, despite the bullish attempt. Now, in that regard, we have the $80 area, which will be serving as our key level for this week. And you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. And we wouldn't be considering selling unless this key level is broken to the downside. Now, with the situation we have here, with the key level here, you can see how this level has played a significant role in negating all attempt by the buyers to break out of the structure, at least for the first half of this month. And not until last week, we finally saw the breakout of the structure. And in fact, not only a breakout, we saw price came back, retest the structure, and it appears that the bullish momentum is continuing to the upside. Now, for last week, we had a new high for this year, which is at the $81 area, which appears to have been broken at this point in time. So what we want to be doing now is to try to understand how market participants are thinking at the beginning of this week and see how they will be handling this new zone that is between the $80 and the $81 level to decide what may likely happen for this week. Now, to have a better idea into this, I will scale down into the 1 hour time frame, which is our execution time frame. And right here on the 1 hour time frame, I took into consideration the character of price action in the last 1 week. And the first thing I was able to come up with here is an ascending trend line. And look at how this trend line had played a major role in guiding the recent price movement. Now, since price broke above this ascending trend line last week Wednesday, you will see price has maintained the ascent as it continues to respect that ascending trend line. And with this kind of situation, it makes a lot of sense for us to look out for patterns and structures that support the idea of buying, since price is still floating above the ascending trend line. Now, zooming into what has been happening since this new week began, let me zoom in so that we can see things more clearly. So you can see price is trading above the key level, and then we saw price started this week around the $80.50 level, and then we saw some selling pressure around the $81 area. And for me, I had to put the $81 area as my resistance line for this week. So with a range bound structure like this, where price was initially confined within the $80.50 level and the $81 area, I was of the opinion of buying the breakout of the resistance line. So at this point, I have a buy position triggered at the breakout of the $81 level. And if in any way you are taking advantage of this opportunity based on the knowledge you've gathered from this community, well done and kudos to you, as you will currently be running with over 20 pips in profit at this point in time. And with the way things are going, and if you look at the character of this candle about a couple of hours ago, you will see this is looking like a shooting star candle, which signals that sellers are still present in this market, and we may be seeing a false breakout of the $81 area. So we are not going to be ignoring the potentials that sellers could come in at any point in time. But as long as price remains above the $81 area, we remain bullish on this asset. Now, for those of us who had in one way or the other missed out on this opportunity, that is the breakout of the structure, let's see if the market will come back to retest the structure. It could even go as deep as this ascending trend line, where the appearance of buy pressure, signs that sellers are finding it difficult to break down the ascending trend line, would be good opportunity for us to continue the uptrend. So at this juncture, it's simply bullish for us. We look out for buying patterns to join the uptrend continuation. Now, if it so happens that price does not come back and retest any of the structure, that is the $81 level and the ascending trend line, we may likely see price continue to rise from this area. And since we do not want to miss out on that one, what I'm doing here is to mark out the highest level for this week right now, which is the $81.50 level. So you do want to be marking out this level on your chart right now. So I would like to give it a different color. Let me give it a purple. So we have it $81.50 level. So you want to be marking this level out appropriately too on your chart, as we will be needing it to guide more trading opportunities. So if price goes ahead to break out of the $81.50 level, we want to continue the uptrend move. So this is our simple view here today on capitalizing on a bullish momentum. However, in as much as we are looking out for buying opportunity, we cannot ignore the potentials that sellers can also come in at any point in time. And like I did show you a couple of hours ago, that we had the shooting star candle here, though it is followed by an engulfing bullish candle, but we need to be suspicious of this character in our price action candles. So what are the conditions that will make us sell this asset today? Well, first of all, I will need price to break down the lowest point for this week, which is the $80.50 level area, where a breakdown of the structure will show us that the bullish momentum we saw this week at the beginning of this week may be a false one. So the breakdown of the structure may have taken out all the buy positions here, signaling a selling opportunity, where we can be looking at adding more sell positions at the breakdown of the key level at the $80 area. And of course, you know, when price drops below the key level, it further emphasizes more selling opportunities. So let's take note of this one, mark out the key level too as well, just in case price continues to the downside. Now, there's one more thing I would like to include into the bearish expectations here. That is, if it ever happens that price drops to the downside, that we may have the privilege of joining the bearish momentum even before this support line here is broken to the downside. And that will happen if this ascending trend line is broken. Then if we have a breach of this ascending trend line, a retest of structure will be a good signal that buyers are finding it difficult to climb back above the ascending trend line, and we can actually join a sell move even before the breakdown of the support line and the $80 level happens. giving us a good opportunity to maximize the bearish move. So this is my simple view on this asset today, so you can see how crucial the $81 area and that ascending trend line is. So I encourage us all to mark out the structures on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view here. If you have any questions or you need some further clarifications, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. So stay tuned in while I wait to see if there are any questions, and you can use that time to mark out these levels too. All right. So in the absence of no questions, let's take this as a confirmation that all I've said so far has been quite explanatory. And in that regard, let's move on to the next asset on our watch list for today. So the next asset we are going to be looking at for today is the USTech100, popularly known as the Nasdaq. Now, on the USTech100, first of all, last week was more of selling opportunities for us, though the market was more of choppy during the first half of the week, but later on we were able to follow the momentum as price continue to find lower lows and lower highs, giving us the privilege to run the momentum all the way into the $17,760 area. And for those of us who did capitalize on this opportunity, well done and kudos to you. Now, as we prepare for today's trading session, right here on the 1 hour time frame, things are looking very bearish, as you will see. Since last week, Wednesday, second half of last week, we saw this continue lower lows and lower highs here, giving us a situation that looks much more bearish. However, we cannot just jump into conclusion like that, so we'll need to scale up into a much more higher time frame, where we do want to refresh our memories as to what things are looking like on the higher time frame. So my first point of contact for this week is on the 4 hours time frame, where I did took into consideration the character of price action since last year November. And if you look at the structure closely, you will see that price action has been very bullish, and after connecting some series of higher lows here, we have a couple of ascending trend lines, and we have something here to guide our trading decision for the week. And you know how we use our ascending trend lines in this community. As long as price remains above the trend line, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, zooming into the current structure, taking into consideration the character of price action in the last 5 to 8 weeks, it's quite clear that the market is at an all-time high area. And since price tested that 18,410 area, which happens to be the all-time high on this asset, we've seen a consolidation phase between that high and that 17,800 in the last 3 to 4 weeks now, giving us or emphasizing the prevailing uncertainty in this particular market. And of course, this is something that we are used to, especially when price finds a new high. The fear of price crashing may tend to make majority of the key players in the market who had benefited on the bullish momentum to start taking some profits off the chart. And due to this, we usually see price action transition into choppy market conditions, retracement moves, and of course consolidation phase, which is what we are seeing on the chart right now. So how are we going to navigate ourselves through this current market dynamics? So to make things easy for us, we identified our key level sitting at the 17,800, and look at how beautifully this level had played a major role in determining the direction of price action since last month's trading activity. Though throughout February till the last days of February, it was more of a choppy market condition around that key level. However, at the last week of February, we saw the breakout of the structure and of course price stabilizing above that area. And since then, every attempt by the sellers to break through has always been met with strong resistance from the buyers, as you will see here. And last week we saw our price action closed exactly around that 17,800 area. So this area, as you see here, has a strong memory for buying power, at least in the last 3 to 4 weeks now. And one more interesting thing about this level is how beautifully it shares a confluence with that ascending trend line. Now we have a beautiful confluence here where anything that happens around this area has a tendency of giving us the right direction. So we are either going to be seeing price action breaking down the key level and the ascending trend line to incite a reversal move, profit taking activity to the downside. And if buy pressure persists above this ascending trend line, we look out for patterns and structures that supports the idea of buying. So you would agree with me that we are at a crucial juncture in this market. Now, scaling down into the 1 hour time frame, we want to see how market participants have been reacting to this new structure. Now, if you zoom into this to the nature of price action since last week Wednesday, you see series of lower lows, lower highs, giving us this beautiful descending trend line to work with. And with a descending trend line on our chart, obviously it makes a lot of sense that we look out for selling opportunities when price remains below the descending trend line. And the only condition that will make us buy is for the trend line to be broken to the upside, may be retested to incite an uptrend continuation. Now, besides the trend line, you'll see here that since the new week has begun, price action has started strongly around our key level or key zone area. So it started at around the 17,820 and has since been rising, finding higher highs and higher lows in that regard. Now, with the situation we have here, considering the trend line, I would like to adjust the resistant line of this range to line up with this trend line. And in fact, if we go to as far back as last week Thursday, I think we have a structure around here. So we are looking at the 17,950 area. Okay, so I want you to label this now. So we have the 17,950 level, and look at how beautifully that level shares a confluence with that descending trend line we have here. Now, the only condition that will make us buy is for price to break out of both the 17,950, and if you're a cautious trader, you want to be looking at a retest of structure for confirmation to join the uptrend move. So basically, anywhere above the 17,950 makes a lot of sense for us to buy. And please have your stop losses in place. Ensure that they are right below the descending trend line, somewhere around here between 65 to 85 pips, depending on where you place your stop losses to. However, if selling pressure continues around this area, that is the 17,950 and this descending trend line, where if we scale down to the 15 minutes time frame and we are able to identify a reversal pattern, let's say a double top structure, head and shoulder pattern, or even a rising wedge, all we just want to do is mark out the neckline of the pattern and then sell the breakdown of the neckline, and then we can then have another sell stop order below the 17,820 17,800 zone to capitalize on the bearish move. So with the way things are looking like on the 1 hour time frame, and considering the fact that price has been oscillating just right around this confluence here in the last 3 hours, we may likely see price go to the downside. So let's prepare ourselves, looking out for any form of reversal pattern on the 15 minutes time frame. So let's be very patient here. This could take about 3 to 4 hours before it matures, and if it drops further, then a breakdown of the 17,820 17,800 will welcome more selling opportunities. All right, so above the 17,950, we look out for buying opportunities there. So this is my simple view on this asset today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. Hello Vamia87, I see your comment. Thank you very much for checking in. So in the absence of no questions, I want to assume that we are all on the same page. So with that being said, let's move on to the next asset. Okay, I see your comment here, ICO07, who asks how will FOMC meeting, how will affect FOMC meeting the price? Well, okay, I want to rephrase that statement. I think I know what you're trying to say. So you're trying to say that how does the FOMC meeting affect the price? Sure, yes, very good question and sensitive one. It shows that you're just joining us. I mentioned this earlier while we were reviewing the economic calendar, and I did mention that due to the fact that we are looking forward to a couple of interest rate decision events this week from the major central banks, we may likely be seeing an indecisive phase in the market where it will reflect on the chart as an extended sideways trading activity. And due to this, we may see price go through a choppy market conditions, which would further emphasize that major key players in the market are stepping aside, waiting for the events to happen before making any informed decisions. And I went further to emphasize that due to these choppy market conditions, we want to be taking precautionary measures in whatever positions we are taking ahead of the event. So when price moves reasonable in our direction, we move our stop losses to secure the position, as we may tend to see volatility today and tomorrow. So these are the ways. So what we need to do here is have precautionary measures. We know when the interest rate decision finally happens, For instance, for the Feds, majority are expecting that interest rates will be kept higher for an extended period of time due to the inflation data we saw from last week, where the CPI and the PPI data came in beyond expectation to further emphasize the sticky nature of inflation in the United States. And this may likely knock out the idea of any rate cut anytime soon. So things are going to be looking bullish for the US dollar. Let's see what happens. If the interest rate decision is kept the same, we might likely see further traction in favor of the dollar. But if we have any surprising cuts, which I doubt will happen, this could be affecting the dollar negatively. So that is what we are looking at here in this community and how we intend to position ourselves for the FOMC. So ICO07, I do hope I answered your question as expected. If you still need some further clarifications, feel free to let me know in the comment section. I see you, Mugi. Good morning to you. All right, so in the absence of no further questions, let's move on to the next asset on our watch list. So the next asset we are going to be looking at today is the GBPUSD, and last week was quite an interesting session for us. During the first half of last week, it was more of a choppy market conditions where we were doing more of buying until on Thursday we had of the PPI data following the CPI, which all came in beyond expectation, giving some further traction in favor of the US dollar. And of course, the hawkish remarks by the Bank of England's policymakers did not have anything to do to push the pound sterling to the upside. So things are looking bearish, and the path of least resistance for the pound sterling is looking further to the south. Now, since the week began, the new trading week unfolds, the GBPUSD pair finds itself trapped in a consolidation phase, mirroring recent losses. And despite a favorable market sentiment, the US dollar's persistent strength keeps the pair subdued at this point. And all attentions remain fixated on the upcoming Federal Reserve decision, poised to shape the current market dynamics. However, I think that the pair may encounter obstacles amidst cautious market sentiment leading up to this event, and as a result, we do want to be looking for significant confirmations before jumping into any positions. And also remember that the consumer inflation expectations, as reported by the Bank of England last week Friday, recorded a modest decline to 3.0% from the previous uptick of 3.3%. Now, this prompted the market speculations of a potential rate cut by the Bank of England in June, whereby exerting some downward pressure on the pound sterling. And this may be a limiting factor, and this is one of the reasons why I said that this week is looking more of going to the downside. Now, in preparation for today's trading session, I have a simple trading setup which I was able to identify on the 4 hours time frame. And what I did on the 4 hours time frame was to take into consideration the character of price action since the beginning of the month of February. And if you look at the character of market participants since February began, you will see that price had consistently found higher highs and higher lows. And if you correctly connect the pivot lows together, you will see we have a couple of ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we obviously want to be looking out for patterns and structures that supports the idea of buying the assets. Now, we will be using this major trend line here as our yardstick today. Now, if we zoom right into the current structure, as you will see here, you can see how the last 24 36 hours in this market have witnessed price action trading around that ascending trend line. So in the last 6 weeks, this trend line is yet to be broken. Every time price comes into the trend line, we see bullish traction pushing price to the upside. Now, as we go into the new week, are we going to see the same situation happen today, or is there a chance that price action will break down the ascending trend line and the 1.27250 level to incite a downtrend move? Now, look at the structure here. Besides the trend line, we have a key level for this week, which is around the 1.276. And look at how beautifully this level had played a major role in guiding price movements. It was initially a selling niche at the beginning of this month, and during the second week of this month, we saw price break out of the structure, and for about a week, price action maintained above this area. And yet last week, after the inflationary data, which came in stickier than expected, we saw this area broken to the downside. Now we have a range bound structure where price action has been trading between the 1.276 and the 1.27250 area to emphasize the prevailing uncertainty in the market at this point. Now, if I am going to be buying or selling this asset, I would like to see the market give me a signal in the form of either a breakout of the resistance line, that is the key level, breaking out of that descending trend line too. Look at this descending trend line here. If it breaks out both of them, which beautifully shares a confluence with our key level at the 1.276, I want to be in for buying opportunities. However, if that structure cannot be broken to the upside and instead we see price break down this ascending trend line and the 1.2725, then we are in for selling opportunities. So you can see how crucial this current juncture is in this market. So I encourage us all to mark out this confluence on our chart, as we will be needing them as a reference point to guide our trading decisions for today. So with this information we have gathered right here on the 4 hours time frame, let's scale down into the 1 hour time frame, where we do want to see how market participant has been reacting to this current structure, especially around this ascending trend line. Now, scaling back down into the 1 hour time frame and looking at how the market has been reacting to this current structure since the new week began, you will see that price action was initially confined within the range of the 1.27390 level and the 1.2726 area to emphasize the prevailing uncertainty in this market. And one interesting thing about this structure is how that ascending trend line we identified on the higher time frame slices through that range bound structure. Now we have something to guide our ascent for this week, so we want to be seeing price action break out of the resistance line at the 1.239 to join an uptrend move. Now if price continues to climb new highs, then the breakout of the key level at the 1.276 will further confirm the strength of the buyers in this market. Well, if you would ask me personally, instinct tells me that price will go south. That is, price will go to the downside due to the fundamental factors. And one of the fundamental factors is the CPI data, which is higher than expected. The inflation in America is very sticky at the moment, and due to this, chances are that the Federal Reserve may likely keep interest rate higher for an extended period of time, which will further bolster the value of the US Treasury bond yield, which is directly proportional in value to the US dollar. Now, that for me supports a bearish idea. But while looking at the technical structure on the chart, which obviously gives us an insight into the behavioral patterns of market participants, we have no other choice than to follow what the technical structure is saying. So if it goes to the upside, that means this is how market participants wants to react and prepare for the upcoming events for this week. So if price continues to the upside, please, as soon as price move reasonably well, move your stop losses, secure your position. Remember what I said earlier, we may likely see an extended sideways trading activity ahead of this upcoming event. So price may likely come back to snap back into our entry point at every point in time. So let's take all this into consideration as well. Now, the only condition that will make me join a bearish move here, I already have a sell stop order below the structures here. If the price continues to the downside, we are joining right away. However, if the market gives us the privilege to join early, that is, price breaks down the ascending trend line first and does a retest a couple of times, showing us that buyers are finding it difficult to continue the momentum above the ascending trend line, then we can join earlier, and then by the time price breaks down the 1.27260 1.27250 area, we will be having two sell positions at that point in time. So let's see how the market is going to play out here, and please always have enough room for price action to move around. So I simply mean that you should have a wider stop loss. So if you are buying above the 1.2739, stop loss should capture below the 1.27260 area, which will be dovetailing to about 10 to 15 pips stop loss depending on where you entered your trade. And if we are selling to as well, we will be having the same range for our stop losses on this one. So it's a simple setup we have here on the GBPUSD. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, guys. All right, you are welcome, ICO07. Thank you very much. Lassis, good morning. Saynat, I can see you. Abdul too, good morning to you. Nicholas 99 Fish, good morning. I like that name, Nicholas. Trust you're doing very well. And I also see you Zero, good morning to you too. All right. Due to the limited time and in the absence of no further questions, let's jump right into the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And what an interesting situation we have here. Remember, last week was more of a choppy market conditions as we saw price action caught within a range bound structure, which further emphasized the indecision going on in the market, as we saw the CPI, PPI data, which are inflationary data, to emphasize the sticky nature of inflation in the United States. And this has resulted into major key players in the market stepping aside from this market, waiting for the FOMC announcement, which will be coming up on Wednesday. The meeting will start tomorrow, Tuesday, and the announcement will be made on Wednesday for clues into how to position themselves for the next move. However, if we base our decisions based on the current fundamentals, that is the revelation that inflation is still very high in the United States, chances are that interest rate will be left higher for an extended period of time, which obviously will be in favor of US Treasury bond yield and the US dollar. So what this simply means is that the path of least resistance for gold prices is to the downside. Now, in as much as it is looking bearish, we cannot ignore the geopolitical tensions in the Middle East and of course the Russian-Ukraine war, which obviously usually had some appeal to safe haven assets such as the gold. So we cannot ignore the possibilities that price could also rise this week, maybe before the FOMC or even after the FOMC. So we are going to be taking both perspectives into consideration and see how we can strategically position ourselves for whatever opportunity the market presents to us for this week. So to strategically position ourselves for the next move, we want to take a deep dive into the higher time frame, where we do want to be having an holistic perspective into what is going on in this market. So as I said, I will be starting my analysis on the 4 hours time frame, where I took into consideration the character of price action since the beginning of the year. So if I zoom out and look at this structure closely, you will see that it has been a strong bullish momentum since last year October. And if you connect the series of higher lows appropriately, you will see that we have an ascending trend line, which obviously has been respected in the last 6 to 7 months in this market. Now, a couple of weeks ago, I think during the later part of February stroke the first day of the month of March, we witnessed this phenomenal move, this impulsive bullish leg that led to an all-time high for gold prices at the $2,195 area. And usually whenever we have this kind of hold on a second please, I want to take some water. I'm having sorry about the break in transmission. I had to take some water. I think I have a lump in my throat. Okay, so like I was saying, now we have this impulsive move that started at the beginning of this month, reaching an all-time high at the 2,195. And at the culmination of every impulsive leg in a market trend, and there is always this distinctive phase which emerges, serving as a precursor, signaling the forthcoming conclusion of the leg and initiation of a retracement move. So this pivotal transitions marks a critical juncture in this market. And if you look at the structure, ever since price tested that 2,195 area, you will see how market has transitioned into a consolidation phase, which looks more like an uptrend continuation pattern. However, we cannot ignore the possibility of this pattern turning into a reversal setup that may incite profit-taking activities ahead of the weekend. Now, with this situation in mind, how do we intend to capitalize on the next move? And as the gold market reaches an unprecedented high, the prevailing sentiment of fear looms large, hinting at a possible downturn in price, especially after considering the sticky inflation in the United States. Now, to help us guide our trading decisions for this week, we have a key level identified at the $2,155 area, as you will see here. And you know how we use our key level whenever we identify them on the chart. We want to see price trade below the key level to look out for selling opportunities, and price maintain above the key level to look out for buying opportunities. And as the new week began here, you will see that price action has already broken down the 2,155 level, and it appears it's coming back to do a retest of this structure. So let's see if this retest will confirm, and then price will drop to the downside to continue a retracement move of that impulsive leg. And if that is going to be the case, we are looking at around the 2090 and the $2,065 area as a TP target. Now we have the 2065, which beautifully shares a confluence with that ascending trend line. So we are looking at a minimum of about 650 pips to a maximum of over 1,000 pips if price action goes into that ascending trend line. However, in as much as we are considering selling opportunities, we cannot ignore the potential that buyers may take over this market, where the breakout of this descending trend line will be all we need to join an uptrend move. So it's a simple and tactical setup we have on this chart right here on the higher time frame. Now, to help us to position ourselves on lower time frame, we are going to be scaling down into the 1 hour time frame to see how market participants have been reacting to this key level since the new week began. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. Now, right here on the 1 hour time frame, you will see how the week has started on a strong bearish note, as price action started the week around the 2,157 area. And look at what happened when it started. It dropped into the lowest point as at this moment, which is the 2,156, and price came back again into that entry area, now giving us a range bound structure where price action was confined within the $2,157.50 level and the $2,156 area, to emphasize the prevailing uncertainty ahead of the FOMC announcement on Wednesday. Now, the prevailing optimism in the market, coupled with the consolidation of the US dollar strength and the upward trajectory of the US Treasury bond yield, has cast a shadow over gold's prospects at the onset of this pivotal trading week. Furthermore, the prevailing sentiment that the Federal Reserve might postpone interest rate reduction, further incited by robust US inflation figures released last week, has provided additional support to the US dollar. Now, with all eyes on the upcoming two-day FOMC monetary policy meeting scheduled to be announced on Wednesday, market volatility is expected to rise. Now, in this regard, like I said earlier, it is prudent to exercise caution and implement risk management strategies to navigate through the current market conditions effectively. So with that being said, here we have a new structure that we will be using to guide our decisions going forward. Now, with the breakdown of the 2,155 area here, I would like to see a downtrend continuation if price action goes ahead to break down the 2,155 the second time. So in that regard, I'm going to be having a sell stop order below the 2,155 and then add more sell positions at the breakdown of the 2,156 to maximize the bearish momentum to the downside. So that is how we are going to be managing a bearish expectation on this asset. However, In as much as we're looking out for selling opportunity, we cannot ignore the potentials of buyers. And of course, when we have a range bound structure like this, we want to wait for the market to give us a signal in the form of a breakout of the resistance line for buying opportunity, that is price breaking out of the 2157 to give us buying opportunities, or the breakdown of the support line at the 2156 for selling opportunities. Now, with the situation we have here, price appeared to have broken out of the resistance line of this range, so I'm not willing to jump in right away due to the fact that the fundamentals is supporting an extended interest rate, extended higher interest rate for an extended period of time, which may favor the US dollar. So instead of buying right away above the 2157, I would like to see something like a retest of structure or confirmations on the lower time frame, like patterns that supports the idea of joining an uptrend move. So I want to see something like buy pressure, that is, sellers are finding it difficult to break through the 2155, which happens to be our key level, and this obviously will reflect on the chart as continued buy pressure above that structure. Then we can now join an uptrend move to the upside. And if price goes ahead to break out of this descending trend line we identified on the higher time frame, then we shall be looking out for more opportunities to buy. Now, to mark out a level along that descending trend line, we shall be looking at the $2,167 area. So a breakout of that structure will definitely welcome more buying opportunities. So you do want to be marking out this newly identified level at the $2,167 area, looking out for more opportunities to maximize this bullish move. So above the $2,157 50-cent area, we are looking out for buying opportunities. Let's see how the market will play out. It may give about 3-4 hours to see how the market plays out above the $2,157 50-cent area. And like I said earlier, selling below the 2155 and adding more position at the breakdown of the 2156 area. So this is my simple view on the XAUUSD for today. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before we go ahead and round off on today's analysis session. Okay, I see your comment here, ICO07. You're asking here, do you know why the USA banks pushed the price up last 2 weeks? Push what price up, please? I want to know. Rate cost is far away. Fundamental, there is no reason for rise. Do you think that afterwards they will fall to $2,080 area? I would like you to rephrase what you mean by bank push the price up last 2 weeks. Which price up? Is it the price of gold or what do you mean? Now, to answer the other question here, like I said earlier, we may likely see some volatility ahead of the FOMC meeting coming up later in the week, and this could be due to indecision, uncertainty surrounding the rate cut path for the Federal Reserve for this year. And that day, majority want to see what their interest rate decision will be. Will it be left unchanged, or are we likely going to see a rate cut, which I doubt will happen, or are we going to be seeing a rate hike? However, the consensus of the market is that interest rate will be left unchanged for an extended period of time, which will further favor the ascent of the US dollar. And if the dollar rises, definitely the gold is going to drop to the downside. And of course, we have prepared the structure on the 1 hour time frame chart to help us navigate this dynamics, whichever case that happens during the course of this week. So basically, let me read your question. Do you think that afterwards they will of course, if the interest rate decision is left unchanged, there is a high chance that price will drop to the downside. But it's also subject to the FOMC press conference. Remember, the Fed chair is going to be speaking, and whatever he says will be giving us an insight into the monetary projection for the year 2024, and this will also guide how market participants will be reacting to that event. So in the meantime, what we have tentatively is the fact that and based on the consensus in the market, interest rate is expected to be left unchanged for an extended period of time, and this may favor the ascent of the US dollar. So at this point, we may be seeing a retracement going on right now in an attempt to continue the downtrend continuation. So what we normally do in this community is to mark out our levels and use them to guide our trading decisions going forward. And as a result of this, we have a beautiful channel for this week. We have a beautiful key level at the 2155. Let's see how the market is going to be reacting to these levels, and that will guide our decisions for this week. So I hope I answered you correctly. Appropriately. I see who 07. If you still have further questions, let me know in the comment section. Elmio Somi, good morning to you. Glad to have you around with us this morning. I can see you SG21730093, and Fumitech, good morning to you too. Oh, you're welcome. ICO 07. Glad that you found it useful. So I think in the absence of no further questions, we have finally come to the end of our first edition of the Extreme Speed Live Technical Analysis session, and we were able to attend to 4 financial assets today, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also added the GBPUSD and the XAUUSD, all of which we were able to identify simple trading setups that we will be using to guide our independent trading decisions for today. And I do hope you guys marked out these levels accordingly as we all projected. If you have done so, well done to you. So all we need to do is exercise patience and allow the structure to mature. Always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to be having a well-defined risk management strategy in place to protect your portfolio. And remember how crucial this week is, and considering the anticipation of this event, we may likely be seeing an extended sideways trading activity. So we may see a situation where price keep coming back to our entry point every time a position is taken as the indecision lingers on. So let's be mindful of this and don't let us get surprised if any of this kind of development happens ahead of the FOMC. For those of you who joined us for the first time today, I hope you were able to gain 1 or 2 things from what we discussed. If you did, you do want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information to guide your independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course prepare ourselves for tomorrow's trading session, which promises to be another exciting one. So it's on this note I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening. Bye.